So because if the share market, which it did kind of fall a bit with everything happening because people lost confidence.
What's that word we love? Volatility. Is there a sound that goes with volatility? I think it sounds like a bap. Anyway, and it kind of goes like up, down, up.
Any advice and information from this podcast is general only. It has been prepared without taking into account your individual circumstances and needs. Before acting on any advice from this podcast, you should assess and seek advice on whether it is appropriate for your needs, financial situation, and investment objectives.
All right, everyone. Hello, welcome back. J-Mac. Hello. Been a minute. A lot has happened in the world. And I suppose the markets over the last little while, which is why we thought we'd cover a bit of it.
Oh, it's not that much really, just like almost war and fuel crisis, energy crisis, that's it really.
A bit more conflict added on top of the conflict. And as we've seen, whether with what we do day to day, with our clients, I guess, emailing us or giving us a call, there's a little bit of concern out there. Which way is it going to go? What's going to happen with my money? Are we doomed? All of the above could be applicable.
Yes.
But maybe not. We'll just sort of see how we go. So we'll, for this episode 150, current update, we're now on about, I think we're in the couple of million Spotify streams, give or take.
Round it up, yeah.
Yeah, round it up, sure. Add several zeros onto it. Same with our YouTube channel, Instagram, TikTok, like, subscribe, all that kind of stuff. Good to see you all back. Buckle up.
You put in a like and subscribe. We haven't done that yet.
Yeah, I just see that on the videos that I sort of have a look at. I know it's, once now that we're in the millions, we've sort of got to add that to help with our listeners out there. Yeah. So, J-Mac, talk us through, if you want to touch on what's sort of been happening in, let's call it, the last 40 to 50 days.
Yes, what are we now? Mid-April.
Yep.
Mid-April, and I feel like I look at the news every day and there's something else that's changed.
Correct. You could be correct in saying that. Yep.
Yep.
But I guess the key one we sort of want to outline what's been happening in the last few months, specifically with
Iran.
Well, you're not wearing your MAGA hat now. Usually you kick around the office with your Trumpy, your MAGA hat, and how he's I guess leaped into, not to get too deep into the weeds of it, but I guess between America and Iran, and how that has reverberated around the world.
Yeah, I thought it was only meant to go for 5 weeks.
Apparently, it's a story for another time. It is what it is. It's gone up and down, left and right, up and back. Bombs have been shot, missiles here and there. People have died, which is very sad. But I guess what we're trying to sort of get down into is what is happening in the world economically, geopolitically, how it's affecting things that we work in. Oil prices, expenses, day-to-day living, mums and dads, people in their 20s trying to save for a house. This, I guess, has a bit of a cascading effect.
It really does.
Financially, pretty much everyone, give or take.
Yep.
So, as everyone knows, won't sort of suck eggs on that one, but Iran, America, bit of conflict, thrown a bit of Israel, but it's heavily affected how the world is receiving its oil from the Middle East, about 20% reduction, which has shocked oil prices, which has shot up fuel prices. That's been felt. Have you felt it? Your car's pretty economical.
Yeah, it's not too bad, but I guess like we usually go to Ingham to see family, and now we're going, it's going to cost us a lot of money to go there for the day or two, and it's,
right.
I guess it would affect everyone because they might have gone away from Easter, and then maybe they're thinking,
true.
Should we cancel it, or if it's a lot of driving, it's going to cost us an extra $50-$100 than usual.
So for you, with your normal lifestyle, I've noticed you've been around the office a little bit more. You've gone from like a day a month work. Expenses have gone up, so you've actually had to come back in a little bit more.
I have to do what, 2 days a month?
Yeah, sucks to be you, but think of yourself and then think of all the other mums and dads and teenagers and older people out there that have felt it at the Bowser, feeling it in food prices, in every day-to-day expenses that you buy, clothes, manufacturing, tech, that is all going to be affected, plastics, beauty products, that is all getting a tickle from what's happening with the oil supply and prices.
Well, I guess everything's shipped to you too, so fuel there,
Yep.
then its effect on all of the businesses. Every business pretty much needs things to kind of do their day-to-day, and if that gets more expensive, then who do they pass the costs on to?
Yep.
Are we feeling it yet, or will it be next quarter?
Yeah, questions can't answer, but we've had to answer a few, especially from a lot of our clients, whether it's emails or phone calls regarding interest rates, share market volatility, speculation on real estate.
Or interest rates have gone up.
Interest rates have ticked up, which we'll sort of talk about in a bit. But I guess, generally speaking, the Prime Minister's sort of done his thing, I guess, not to sort of go into that too much. There has been a fair bit of that panic buying of fuel that we've seen.
Can we insert a funny photo here of what was the one we saw the other day?
Yeah, we'll have to.
15 jerry cans on top of his car.
Yeah, there's been plenty of that. Don't want to comment sort of too much on the supply, but those are things that have, in summary, have happened in the last sort of few months.
Yes.
And that's kind of changed a few things, but we'll get into it. All right, and the other one, I guess, was the interest rates trickled up a little while ago, and that's affected some people cash flow. We may or may not have a few more this year, so fingers crossed. It's a double-edged weapon. On one side, I've had a few clients that don't have a home loan, have plenty of money in the bank, and money elsewhere, but for them it's good. For the everyday majority of Australians that have a mortgage or even paying rent, interest rates go up, they feel the pinch, and then you add on the compounding effect of all the other expenses that are going up, which are general concerns. So for anyone out there that's listening, we're definitely seeing it here with our clients, and no doubt it's happening for everyone that's out there. They've got very similar questions from that. So from everything that's happened in the Middle East and the interest rate rises, you want to touch on some things, say like superannuation? What have you noticed? Some client inquiries?
Yeah, I guess if you keep an eye on your superannuation, you would have seen,
every hour? Should I be checking my super every hour?
Every hour?
Damn.
Not even
anyway,
we do that. Yeah.
Right.
You would have seen perhaps your balance go down if you're invested in shares, which most people are by default.
Which is touch back, because we've done super a fair few times. So say that again. Even though a lot of people might not have selected how they invest their super, you're saying they've probably got some share market-y stuff in their super.
Yeah. So by default, what do they call it? The
like balanced or my super?
My super selection. By default, if you haven't changed anything within your superannuation, like the investment strategy, then by default, usually, I don't know what, 20-30% are in Australian shares, 20-30% international, and then there's some property,
so for most people,
cash. So because if the share market, which it did kind of fall a bit with everything happening because people lost confidence.
What's that word? We love volatility. Is there a sound that goes with volatility? I think it sounds like a bap. Anyway, and it kind of goes like up, down, up. Anyway.
Or we really need a Yannick sound. That's what we need.
Yeah. So day to day, valid points. That's good you mentioned that. So, for everyone out there, you've signed up to your super fund, you haven't really elected anything, how you put your money, you will most likely hold some Australian and international shares, give or take in between 40 and 70%. So as J-Mac sort of mentioned, when these bits of volatility that happen and the news sort of shocked the world a little bit, you may have seen your super blip down for a little bit, which is reverse of what we've seen the last few years, where real estate and share markets have usually gone in a good direction, and everyone's been happy to go, I'm making 10-20% on my super or whatever, because that's all right. So look, generally, have you no doubt you would have chatted to some of your clients, they've emailed or called up, hey, my super just went down, J-Mac, what the hell have you done to me?
Yeah.
What's your soothing words for them? Is there a calm, collected?
Soothing words.
Or do we start with mine? You go with yours, ladies first.
Ladies first. Well, something I've been bringing up a lot, and you can Google this yourself, is the Vanguard index chart.
Yep.
If you Google that, it'll take you to the Vanguard page, and then there's I think at the top of the page you can click it, and it feels like it's really good because it shows you since 1995, what's happened? Like the prime ministers we've had, the presidents in the US we've
world
had,
events, presidents, prime ministers.
the dot-com bubble burst, the GFC, the COVID, and like COVID dropped by what, 30%?
Yeah, it was about 30% in a week.
Over a week,
give or
whereas the GFC dropped consistently
40, 45
for like a year and a half. I
yeah,
think it
year
was.
and a bit from top to bottom.
Yeah.
Shook the worlds a bit. Yeah, okay. And what is that sort of index? What does that graph kind of outline?
I think it started, if you invested 10 grand in 1995, and then what is it now? And I think it's about 30 grand your cash would have grown by.
Yep.
If you put it in shares, the same 10 grand would be up around maybe 100, 150,000. So yes, there are big drops. They're substantial. And when you're in it, like we have been in the last month or so, you're kind of questioning everything. But I think it's good to take a step back if you are in a long-term investment and look at the past. And, you know, when you're in it, it seems crazy, but in the long term, I think it's worth it.
Yeah, okay. And that's and look, that's not only sort of super. I guess on the other side, whether you've got you've got some investment clients, we all sort of do, and there's people out there that have got money in the share markets. Some are happy with their game plan, but the same rules apply. If you've got money in the share markets, whether it's an individual company or one of the several big indexes, Asia, American, European, Australian, you would have felt a little bit of a pinch, and you may still feel a bit more of a pinch as this volatility goes on. I'm loving the memes now. Everything that's happened, besides the MAGA hat, there's also the taco thing with Trump, take action, chicken out or whatever.
I haven't seen that one.
So you'll pump out a heap of sayings, shout out to Trump, I'm going to do this. I don't know if he sounds like that. But you'll kind of put that out on X or whatever, and then you'll kind of pull back from it. So I think he's putting it out there in the social media side, and then he's chickening out, and they're calling it the taco something. I don't know. Anyway, but all right, and
What about you, Yannick? Have you had clients kind of feeling a bit nervous with their balances going down, both in super and maybe outside super investing?
Yes, I've had to answer a few emails, chat to a few people, just on kind of what's happening. And look, it's funny, as an advisor, you're there to offer that professional and educated sort of opinion. There's definitely a few clients that try and give you the told you so.
The told you so?
Yeah, kind of like, oh no, I'm not going to put money in. Staying away from the shares because, you know, the GFC or the COVID, and it went like 100%. Just like that graph you talked about, a lot of clients have still got 10, 20, 30 years talking about super or when they want to access their investment money. Kind of similar rules apply. Yes, share markets did go down, like literally the ASX, I think, and that dropped like 10%, I think, from top to bottom a few months ago. It's now recovered. You know, sometimes you got to look in yourself, that little bit of humbleness, think about the long-term plan. But to answer your question, yes, a few clients. I'm trying to think if I've cuddled any. I've tried to coerce them to come in and go, look, let's just book an appointment free of charge just to get some cuddles out. I don't know. Just
oh my God. This is what the type of service you get with Yannick.
Yeah, so you know it'll be all right. It just depends. I haven't had anyone send me an email saying they've cashed out. I don't think, but no doubt there are people out there that might have seen it, or could be a good time to buy. But yeah,
and you know like that's good too. Like if you do come get a cuddle from Yannick, it's not all you get, because I think where we add the most value is we help people through that difficult process when they see their super balance go down, where people don't have advisors, don't really have anyone to lean on. Yeah,
no, that's a valid point, and we chat to that with clients as well. And whether it's not just us, but any advisors out there and people that have financial advisors, I guess if you're ongoing with them or you've paid some sort of fee or commission or whatever, that is part of it, is leaning on them for the reassurance, justification of the plan, reconfirming the plan, because that's, I guess, what your advisors sort of should be doing. You know, so these moments of juicy volatility will be the bits where you start getting those cold sweats and like, oh, my super just dropped. You know, let's just say, for example, at the top end of the tree, there might be people with $1 million in their super. You know, we talked about the volatility a little while ago, 5 or 10%. If you've got a swag of that in the share markets, which you may or may not have, you might have seen your super change by 40, 60, 100 grand potentially.
Yes.
That's a fair bit to happen in literally a week, thanks Trump. But, as long as you've sort of got the right battle plan set up, reach out to your advisor if you've got one, because that's, I guess, why you might have paid them the money to...
And that's what we're here for.
Yeah. Look, I guess on the other side, a lot of people sort of might reach out to mum and dad, grandma, granddad. Sure, do that. Just be careful, I guess, of the information you're receiving and if it is fit for your purpose.
I have heard a lot of people say, oh, grandma lost a lot of money in the share market.
I hear that a lot.
And it can happen for multiple reasons. So you're right. Yeah, maybe taking a few different opinions or a third party unbiased opinion.
That definitely comes up. I think I try and use the example of Uncle Sam. I don't know, Auntie Janet, is that an auntie's name?
Yeah,
I don't know. Remember when they lost all that money in the GFC? It is case by case specific. Or in COVID, bad investment experience. We still get heaps of clients that do it. 100%. Can definitely chat you through that and dig out a bit more detail and outline why it happened, how they realised their loss. It's a fair bit to it.
There is, yeah.
Maybe a bit too much for a Sunday barbecue, but again, if you're seeing an advisor, that's why you're sort of paying those fees. So, main message from that, JMac, regarding sort of this investment-y stuff is, I guess, staying the course. Is that? Yep. Okay.
I guess it depends. Like, everyone's different. They're invested in different things. But if it is a long-term investment that you're planning to hold or you've spoken to someone about, then it's difficult and emotional sometimes when your money goes down. But if you can stay the course, that's how investors win, I think, in the long term.
Yeah, okay. So to summarise a little bit on the key events, everyone's sort of seen them out on the news, so we won't sort of harp on too much about them, but I guess some general ones for clients that you'd sort of recommend while we ride through this uncertain period of how much restricted access to oil is really reverberated around the world and especially affecting us.
Yes.
Any budgeting tips you've got maybe that helps households week to week, month to month, just deal with, especially for some families that might be doing a little bit tougher or a bit tighter on their cash flow? Is there anything you can sort of outline?
Yeah. We do like the bucket strategy.
Yep. Talk me through it.
Similar to what Mr. Barefoot Investor does, where it's very good in that it works for me too. I think you can see what you're spending or where your money is. So you might have a bucket for everyday stuff.
And he illustrates that, doesn't he? Is that right?
Yeah, fuel expenses, and then have a long-term one so you can kind of have money there ready to go for rates or car insurance, and then savings. But I feel like me and my partner had a chat the other week because we were looking at how much we're eating out and kind of shopping, and we want to be more intentional. So I feel like even just looking at and understanding what you're spending. And
so was your problem with your partner before you had like buku surplus funds and now you've got a little bit less than buku surplus funds? Is that the problem?
I wish I had buku surplus
Damn.
funds.
Yeah, okay. No, that's sort of a valid point.
Yeah.
Because for some clients, if it fits, I sort of mention if they've got a budget one, we use a real basic one. There's heaps of apps out there, but I guess if you've got a budget outlined, let's just use Excel for an example. If you know you're going to change career or change incomes, you can kind of copy and paste that budget and do like a hypothetical on a reduced income. You might be able to do the same, whether it's pen and paper or Excel, do another budget with increased expenses and just see where it just sits. So if your incomes are the same, your expenses, I don't know, throw in, like for your fixed and discretionary, throw on another 10, 20%, or even add in the fact that fuel's gone up. Might be costing some households an extra $200 a week. Or their other cost of living might have gone up by 5-10%.
Yep.
Add that in and just see how much it chews away from like your net cash flow, and then sort of go from there. And if it comes up in red or you find you're getting close to borderline negative, then you might need to
dipping into savings.
Yeah, you might need to tweak a few things because who knows how long this will go for. I think this might sort of kick on for a few more months.
Do you think it's worth like reviewing car insurances or home loans? loans rates?
Yeah, they're definitely something you can sort of review periodically. I'm not sure if they've had a direct increase due to what's happening, but inflation is a real thing. So 9 times out of 10, you're going to get some increase in your other bills yearly. But we've definitely seen fuel-wise. I was actually really interested. We talked about it here. News went out. America started giving Iran a bit of a schwack. Literally a day or two later, fuel prices lurched up. But the funny thing is, I guess a lot of those are done, a lot of oil purchasing and stuff is done on futures. So all those prices are kind of already pre-established. Fuel companies were happy to sort of, oil's been restricted. Well, you haven't felt it yet.
Very interesting, isn't it?
Fuel prices skyrocketed. Story for another time, but all right. And look, on that, that's all like the America sort of Iran thing. But talking about the interest rate rises, any things you want to add on that, especially with the rate rise we had, I think just a little while ago.
Yeah.
And we may get another one if inflation keeps ticking up.
Yeah, I think they are predicting maybe 1 or 2 more this year.
Yep.
But that always can change, so not determined. But I guess if it does go up, maybe even thinking about giving yourself a little bit of, if and where you can. Obviously, it's very hard with cost of living.
Yeah,
Making sure you're prepared. If you are going to buy a house at the moment, or you're thinking about buying it, and you're finding your repayments are very high.
Yep.
Compared to your income, maybe just adjusting, because you don't want to buy a house and then all of a sudden repayments go up, and then you're pulling your hair out, grinding your teeth every night, and then it's even more horrible when it's supposed to be such a fun experience. So just giving yourself maybe a little bit of buffer.
Yep.
Yeah,
okay.
What any tips or tricks?
No, I was going to ask you, I guess, look, inflation's still ticking up. That's one of the main reasons why the RBA increased interest rate rises, just to slow the economy. Naturally, with expenses going up with all this oil stuff, but if we're not really earning more, productivity is not going up, that's going to affect people a fair bit. That's still going to increase inflation, but yet we're not really earning more or whatever.
Yes.
Yeah, so it's that. Also, when we talk about like the house purchasing stuff, might affect a few people. Can't answer that one now, but watch this space. It still might happen.
Yep.
All right. Random question to finish it off. Let's roll the dice. Put your betting hat on, your punter's hat at the Melbourne Cup. You're in the bird cage. What are your odds on when will this all sort of finish? When will this peace talks back and talk now? Trump and Iran are sort of doing their back and forth, do this, do that, no deal, send a few rockets over that way. He's blockaded the strait at the moment. US Navy's kind of blocking ships in and out to really put the choker on Iran and how they get their fuel out, or their oil, sorry. Come on, put your money where your mouth is. You betting like, I don't know, another 10 days, 20 days?
Red or black?
You can get 0.
0?
Oh, that's, yeah.
Oh gosh, yeah. There's the pressures on Trump, I guess, because we need our oil.
Well, the world is feeling that, and due to his actions, whatever reason, everyone's feeling the pinch. So tell that to the mum and dad that have, I don't know, or the young couple that are earning a little bit. They're
feeling the pinch.
Yeah, they didn't really ask for it. Without getting too deep into that whole side, the majority of the globe is feeling a bit of the pinch.
Yep. What do you reckon? What's your bet?
I don't know. Look, there's plenty of money to be made in more ballistic missiles going around the continent. It's a story for another time, but it's very interesting. America's sort of sorted with their oil for now. How does Australia go? I think we've got a bit more to run yet.
We're in a bit of hurt for a bit longer.
Yeah, well, my kids live off lettuce and rice anyway, so looks like they're just going to...
Just lettuce from now on?
I can't give up the rice.
Oh, yeah.
Yep.
Rice is good.
Yeah, I can't give it up. We'll see how we go. All right, Jamie, have you got anything else for that one?
No, that's it. That's our market update, is it?
Yeah, very general. Long story short, for those, I guess, whether you're with us or other advisors or you've got skin in the game, property, real estate, shares, stay the course.
Stay the
Hopefully,
course.
if we have a major World War III, then we've got bigger problems, then Maybe you might need some
super.
cash under the mattress. We'll see how we go. All right, Joe Mac, thank you very much.
All right, thanks.